The content of this podcast is for informational purposes only. Statements made by hosts or guests reflect their own beliefs and opinions and is not investment advice. The hosts or guests may have personal investments in any assets being discussed.
Hello, everyone, and welcome to the DeFi Podcast, where we discuss any and all things crypto. Your usual host, JF, just arrived in Buenos Aires for the Avalanche Summit, which will take place in a couple weeks. JF is part of our advance party in the local area there, scouting everything for us. So I'm going to be taking over host duties for this episode to lighten his load a bit. I apologize in advance. JF is a longtime Web3 builder and currently the head of DeFi for GoGoPool, a liquid staking platform that's designed for and built on Avalanche. JF, how are you doing, bud?
Good. I love Bill host. I think maybe we should make this like a recurring.
Oh, God, my deepest fears already realized. All right, yeah, awesome. Moving on. Okay, next we have Jared. Jared is a true crypto OG. He started mining Bitcoin blocks over a decade ago and has been involved in crypto ever since. He's currently a senior analyst at GoGoPool alongside JF. Jared, how are you doing this week, bud?
Pretty good. It's worth mentioning that I'm not still mining Bitcoin blocks. I actually stopped for a while, but I did start in 2011. So
2011. Wow. Okay. So 13 years ago. Wow. Holy cow. That's early. Okay. Next we have Rhett. Rhett is the founder of Gravita. Gravita is an ETH focused borrowing protocol whose mission it is to support the decentralization of Ethereum liquid staking tokens. He is also the founder of Avant, a new protocol that aims to create the best yield-bearing stable value token that you can find on any chain. Rhett, how are you doing today, bud?
Doing well. Glad to be here.
Great. And I'm Bill. I'm a former TradFi guy who fell down the crypto rabbit hole in 2019. I now run a small hybrid trading and investment firm called Daybreak Digital, and it is my pleasure to be on the podcast here with all three of you guys. Even though it seems like crypto cannot catch a break. We're just talking about this before the podcast started, which is that everyone expected October to be Uptober, and we've all been severely disappointed. I think we all got bulled up on rate cuts from the Fed and token 2049 YouTube videos, but then it seemed like war might break out in the Middle East, and crypto is not doing so hot, except for, with the exception of like a handful of coins. None of the majors are doing really well. So I just wanted to check in with each of you, see how you're doing. What do you think is going on with the market? Should we bullish or bearish for the rest of this quarter? How are you guys feeling right now?
So I'm not much of an Uptober
Good
person.
question.
I'm more of an October. So that's my view.
We are the
Okay.
perma amongst us, so yes, that makes sense.
Serious question for you though, Jared, because it's different. Like following crypto is different when you're really in it, and you have been in it longer than all of us, right? So you've been through multiple of these, not just the extreme bull cycle, like the top of the bull and the bottom of the bear, but also this period where it kind of feels like it's built into the market. Like, hey, we should be experiencing a crazy bull market soon. That's kind of how we feel right now, right? All of us have all these altcoins and we're waiting for the 2021 to happen again. Is that how it felt for you in previous cycles, or like, were you paying that close attention? How does it feel now versus like before 2017 and before 2021? How do you feel versus those times?
Yeah, I feel like it is what I normally think to myself as like the lull period, where you're going to wait for something to happen and you're going to think something's going to happen, but nothing happens. I remember, I don't remember if it was 2020 or 2021, but there was a period of time where Bitcoin was so low volatility that it would be like an entire month where the price didn't change. Like it was just flat. And I think those periods are actually kind of needed before you see some more major volatility. So I think, we're still like, Bitcoin is in kind of a long-term downtrend if you look at it on, like, you zoom out and look at the chart. And there's no real indication that it is interested in moving either up or down. So until something breaks in either direction, we're still going sideways for quite a while. And that's my take. Mind you, the lower bound of that sideways performance is like 40K and the upper bound is like 60 something.
Interesting. Okay.
So I tend to be kind of the opposite of Jared. I don't think I've ever not been bullish since I've been in crypto, and I'm often wrong. I have been confused a few times. I remember during DeFi Summer in 2020, there was a single month where like total usage of the Ethereum blockchain went up by like 12,000 and all these DeFi projects and tokens were coming out. And I was like, and ETH was flat. And I remember calling a buddy, I'm like, why is ETH flat? Like, it's being used in this major way. And he's like, I don't know. And then like a year later, it took off like in a really big way. So my short-term predictive power is really bad. I think a couple of the reasons why I think we're having such bad price action is I think there's just a lot of fear for lots of reasons. So there's war breaking out in the Middle East, which is really scary and problematic. There's uncertainty over the US elections. Like, it's kind of a dead heat between Trump and Kamala, and there's uncertainty over, you know, what that results in as far as crypto legislation. A lot of people think that we're heading into a recession, potentially big, you know, hurricane damage just happened. And then there's this longshoreman strike coming in that could have really major negative impacts on the economy if that strike happens and we end up blocking off all the eastern ports, basically. So I think there's a lot of fear in the market from like lots of different angles. And in those situations, I think people tend to still say, I want to have dollars in my pocket. So I think that's a big part of what's going on at the moment. And I even know some really like long-term crypto OGs that are like kind of accumulating dollars right now because of kind of this uncertainty. I think a lot of that uncertainty goes away over the next few months, but you know, it's uncertainty for a reason. It's kind of hard to tell. I do think there's one other factor too that is having somewhat of an impact, which is that the rise of AI. OpenAI just did a big fundraising round this week at, you know, valued at $157 billion, I think. And if you look at like new dollars coming in to invest in tech, there's still like, you know, lots of crypto VC funds, et cetera. But I think in the last crypto bull cycle, a lot larger percentage of like the tech related investment inflows were coming into crypto, whereas now probably a larger percentage of that's coming into AI. So I think there's like a little bit of diverted some funds that otherwise maybe would have made their way into crypto. I do think there's going to be a number of ways those intersect, and they're not mutually exclusive, but I think in the short term, probably a lot of those dollars going into AI would have been going into crypto if this LLM boom weren't happening.
I think the key of what you said there to me is the uncertainty piece. And I was sitting down thinking about it because during the 2016 and the 2020 general elections, I was trading interest rates very actively, like 12 hours a day focused on interest rate markets. And in 2016, the big uncertainty going to the election, you know, it wasn't just the election itself, whether or not Trump or Hillary was going to win, but the big question was, if Trump wins, is it going to be ridiculous? Like, is it, you know, is he going to impose these crazy tariffs and put in legislation that just doesn't make any sense? And I remember the evening that it became clear that Trump was going to win, actually interest rates showed like that they were going to go negative, because I think we were very close to zero. So the markets priced in, the Fed was going to cut, and then we were going to go below zero just for like a few hours. And the stock market tanked like crazy. And then like late in the night, whenever Trump came out and gave his speech, it just became clear to the markets that like, okay, like Trump's personality is one thing, but it sounds like he's just going to be a generic Republican, which means tax cuts and deregulation. So then risk assets just did really well, right? Once you eliminated that uncertainty, like, hey, if Trump wins, like what's going to happen? And we're like, oh, okay, the market was like, it's just going to be a generic Republican, you know, for good or for better or worse, we're going to get tax cuts and deregulation. You eliminated uncertainty and the market did extremely well. Same thing in 2020 in a different sense. You know, when the election happened in 2020, we still had no vaccine, right? So I think shortly after the election result was basically in, they announced that they had a vaccine with a tremendous efficacy rate, right? So that uncertainty got eliminated and the market just took off and did extremely well. those were the two catalysts, the previous two elections. So I think when in 6 months' time, when we look back, even in 3 months' time, when we look back, one way or another, at least for the crypto world, we will have eliminated a big uncertainty, whether or not we're going to get a crypto friendly regime or a crypto hostile regime. So, at least in some sense, like uncertainty is going to be eliminated and people can kind of start making whatever bets they want to make. Maybe if it's going to be a more hostile crypto regime, like people pile a bit more into Bitcoin and Ethereum and things that are, it's more difficult to stop through government regulation. And if it's a Trump, or if Trump wins, then maybe a lot of the altcoins do really well. This is kind of where I'm kind of positioning for in the markets. Yeah. JF, do you have anything on macro, or do you want me to move on to the next topic?
No, I find it interesting to think about macros, but it's really hard to model like large, complex human systems. So it strikes me that, it's just not something I sort of invest based on. I'm always surprised that so many people are so confident in doing that.
Yeah, it's like it's forefront in our minds, but really there's very little that you can do about it. Because if you're a very good macro trader, you're probably just like, a stud at some hedge fund somewhere, right? Like the really good macro traders, they're just keeping quiet and not really telling anyone what they're doing.
Yeah, some people may scoff at this, but I actually kind of think that if you're in crypto, it's surprisingly easy to track like where it's going to go. And I mean, not necessarily where it's going to go, but how it's going to move, because we have a very long track record of crypto moving in the same way for a really long period of time. And the way that is you have, let's say, 2017, Bitcoin shoots up from $1,000 to $20,000. And then the next 3 years, it's bearish. And then you have 2020 or 2019 or 2020, crypto shoots up to 65K. And then the next...
If you're talking about Bitcoin, yeah.
Well, yeah, but I mean, so the thing is, I primarily track Bitcoin as kind of like the same way you would track like the S&P or an index fund, right? Because Bitcoin leads the market. It is the biggest player in the market, and everything is going to perform based on where it is and where it's moving. And so you have obviously some new protocol can come out and they can be, massive shoot up in price, and eventually that thing will come down and kind of find its right price. But I mean, it's very fair to say that in crypto, you have the big moves are like this, and then you have a bearish period that's like this, right? You have massive over speculation where the price skyrockets, and then you have the real price discovery where maybe it crashes and then it comes back up by 50%, and then it goes down by 30%, and then it kind of finds some equilibrium. If you can expect that to happen, you can actually trade crypto very profitably.
Yeah, trading crypto profitably is, you make it sound really easy, which it has not been so easy for me, but okay, maybe after the call, I'll take some notes. But okay, let's move on to World Liberty Financial, which is the Trump coin or the Trump project that's taken some new steps this week. So just real quick refresher on what it is. So for a long time, there was speculation about what the official Trump coin is going to be, or the Trump project. There were some coins that pretended or may have been associated with the Trump team before. But then, I don't know, maybe 2 or 3 weeks ago, maybe a month ago, the Trumps announced on Twitter that they have an official project. It's called World Liberty Financial. If you're going to go follow it, make sure you go to the official Trump, Eric Trump's Twitter page. Make sure you're not following some scam page. But initially the rumors were that this project was going to essentially be some sort of a fork, a friendly fork of Aave or some evolution of Aave. And then they said it was going to be more than that. There was a 2 or 3 hours long Twitter Spaces where Trump, got on Twitter Spaces and talked about the project. They had a bunch of other people talk about the project. And I listened for about an hour before I turned it off because they weren't really talking about what the project was going to be at all. It was just kind of people essentially kissing Trump's ass on a Twitter Spaces, which, that's fine. Here's what was interesting to me is I had no idea who the host was. I spend way more time on crypto Twitter than I should, and I had no idea who the host was, which is kind of weird. It's difficult to know, like who from crypto Twitter is actually connected to the Trump campaign and how that happened. It's none of the people that you would think of, like kind of high profile, like very high quality crypto people. It's usually people I just haven't heard of before. Now they are, like in the last few days, they're actually opening up the project for investment. So I guess they've announced some details, like it's available to accredited investors only in the US. So Gary Gensler protecting everyone from generational gains. Yeah, again, thank you so much. It's supposed to be a DeFi focused token. They really haven't talked in detail about what it is. 63% of whatever the token is going to be available for public purchase. 17% they're saying is going to go towards user rewards. So there must be some sort of emissions with the protocol. And about 20% is going to go to the team. And the team is going to include, like, the Trump family members are included. So some of the Trump family members are directly going to receive tokens as part of World Liberty Financial, whatever it is. So Rhett, so for you, you're a builder. You've worked on Gravita and on Avant. You've worked on tokenomics. You've been this guy who's devoting tokens to team members, including yourself, right? But you want to make sure you're doing everything above board and honestly, but it's hard when the regulations don't tell you exactly how to do these things. So when you see the Trump family themselves launching a DeFi protocol and making themselves part of a team, right, how does that make you feel?
Yeah, I think I view it as very positive, honestly. It is normalizing the industry. I think there's been a lot of fear from a lot of DeFi builders of unfair SEC crackdown. I think as you see people like the Trumps getting involved in building something and allocating these tokens, it demonstrates that more mainstream people are getting involved, and there's likely going to be more regulatory clarity coming down the line. I think that's probably true regardless of who wins the election relative to the current state of things, but even more so if the Trumps win. I also, looking at what they are building, so I think more competition in DeFi is good. Like, it's a nascent space. It's good for more people to come in and try and solve decentralized finance. And my understanding is that World Liberty Financial will basically be a kind of a front end on top of Aave, trying to make these lending and borrowing markets more user friendly. And I think that's great. I also, one of the advisors to the project is a guy named Corey Kaplan, who's the founder of Dolomite. I've known him for years. He's a really high quality builder, really high ethics, et cetera. And so I think the likelihood that this project is like some kind of rug or, worthless sort of thing, I think is somewhat low. One thing I do find noteworthy is that participating in this, token sale requires you to be an accredited investor. I think a lot of people who are more crypto native find that like evidence that there's still kind of a disappointing kind of restriction in the US where it's hard for retail to participate in some of these things. And I think some of us think that ought to change, given, there should be like proper disclosures, et cetera. Although maybe they'll make it easier for people to come in and earn the token by using the system. And so maybe you get access that way. So on the whole, I think it's positive. It doesn't seem like a full grift. It seems like they're trying to build something useful, something user-friendly, something that would bring in new flows and users to DeFi, et cetera. And I'm all for that.
Okay, so just a minor follow-up to that. Do you think they're actually trying to build some, next-gen DeFi protocol that's going to get a ton of use? Or is it more just a signal to the market? Like, hey, like, we believe in this stuff so much, we're backing it, we want you to build, and here, like, we're building, so you should feel comfortable building. So like, is it more a project that they want to make a difference themselves? Or is it, I took it more as a, hey, it's a signal to the builders in the US, like, hey, it's safe to build here. Go ahead, build. We're doing it. You should do it. What do you
I view it more as that second. Yeah, it's like, hey, it's a signal that like DeFi should be taken seriously. Building in DeFi is a good and safe thing. As far as like if this is like some massive new innovation, et cetera, like I expect it to be like not like a huge 0 to 1 game changer for anyone who's already in DeFi. But what it might be is if it does really improve the user experience, like notably for Aave, for someone who's not DeFi native, I think it could result in like additional inflows. So you could think of it maybe like Robinhood like wrapper on some DeFi, which just makes it more friendly to people who are not like deep in DeFi. I know lots and lots of people who are like really afraid to use DeFi because, you know, I click the wrong button, I might lose all my money. There's fears over those things. People like not understanding how wallets work and these different things. If they do a good job of abstracting that stuff away, I think you could have legitimate, like pretty big inflows. And I think that is like a pretty important area where we need to be improving. So I'm glad to see another team. There's lots of teams working on this, but I'm glad to see another team coming in and trying to make the user experience better.
I'd love to know if the motivation for this project is to signal that they're pro crypto and to move the industry forward, or if it's just that the Trump family is sort of like almost overly entrepreneurial, where they'll just try anything to make money. I remember Trump ties and Trump University and Trump, businesses in which they have no special knowledge, right?
Trump stakes. Don't forget about the stakes. Yeah. And the book, he wrote a bunch of books. Yeah.
So it does seem pretty consistent with like sort of their modus operandi, right? Like it's just maybe the way that they just do things. But I do think that it's a great example. I hope they make a bunch of money doing it, and that it attracts other stars into DeFi and crypto that can trade on their name and just bring users in. And if they can be rewarded for that, why not? We want to move DeFi forward, right? So anything that goes in that direction, I'm very happy with. As well.
Agreed. Yeah, I mean, I would love to see, like, in 2 years' time, basically all the DeFi builders, hopefully all of them based in the US, go to the White House for like some big DeFi thing. And, you know, they would just be beautiful. Like, it just makes sense, right? It's like this new, cool industry, a lot of potential. And like, you know, I think if you tell American builders, like, let's go, you know, I think it would be really motivating.
DeFi Summit at the White House. Yes.
Yeah.
And maybe this time, like, actually invite the real builders, unlike when they did the EV Summit at the White House, and they did not. And I think they invited Ford, who made like 0 cars that year or something.
What a joke. What a joke. We could spend a whole hour talking about that, but
yeah.
Okay, let's move on. So speaking of DeFi builders, let's talk a little bit about EigenLayer. EigenLayer had their airdrop this week. What did you think about that, Rhett? About their finally, after a very long points program, a lot of ETH whales farming the points forever. Finally, the token was, I think you said it was transferable this week, right?
That's right. Yeah. So the original Eigen airdrop went live a few months back. There was some significant frustration over that. So EigenLayer, I would say, is, especially within the ETH community and maybe within the entire crypto community, is like possibly the most hyped project in the last like 3 years. Very, very, very high expectations. Within a short period after launch, it became the third most like highest TVL project in all of crypto. It's Lido number 1, then Aave, then Eigen is kind of the ranking there. It's doing something like, it kind of invented an entire new category, this restaking category, which for those not super familiar, it's this idea of reusing staked assets to give economic security to like additional services. And it's, you know, people, especially in the Ethereum community, find that really interesting. So when the airdrop went live, there was tons of people excited about it, and then it dropped and wasn't transferable. And there's a lot of people who love to farm airdrops, just capture them and sell them. And there's a lot of frustration about that. And some people felt like, hey, you didn't let us know ahead of time. So there was this kind of angst. I kind of got pseudo canceled at the time because I tweeted and said something like, posted on X and said something like, you know, I don't really understand the frustration that much. It's like you got some free money, and people pointed out that it's not truly free because I locked up assets and something that could have risked my my bags, and a bunch of people unfollowed me for even saying that.
Is that right? So you tweeted that out and you noticed your follower count went down?
A bunch of people said unfollowing, and there were like some real actual unfollows. And when I said free, I wasn't trying to say that it was like without cost in any way. I was meaning something a little bit different, but there's some sensitivity on X sometimes in crypto Twitter. But
sorry to interrupt you, but wasn't there also some controversy? Maybe I'm misremembering it, but about how the token unlock timer basically technically would start when the token was distributed but not transferable. So people were complaining like, hey, the VC unlock clock has basically started and we can't sell this thing. But then some VCs basically said, look, we'll just, I think they promised to relock till, well, that was Eigen, wasn't it?
There was some claims about that, but my understanding is that the VC unlocks are like way after community unlocks, both VC and team unlocks. And so I don't think there was a lot of truth to that, is my understanding. There's been also some speculation about like, hey, really how valuable is Eigen at this point? Because you have the things that you're restaking your assets to secure, they call AVSs, actively validated services. And you can have all kinds of different AVS. It could be an L1 that, rather than staking its native asset, you're restaking ETH, for example. Or, now you can restake some other assets as well, not just ETH. Or it could be some kind of infrastructure type service that gets restaked. And there's lots of these AVSs coming online. None of them yet have massive usage. And so none of them are going to be paying tons of money to restakers. And so some people feel like, hey, this is kind of this big house of cards. You have $10 billion in this system. How much real revenue in the system is even going to be there in the even medium term? It's unclear. My view is like in the short term, playing the restaking games is like, you're just going to kind of get this steady stream of airdrops probably from AVSs as they go live. And it'll be probably years before any one AVS is generating huge revenue. Like if you look at the whole crypto ecosystem at large, there's only one blockchain that you would call like net profitable, and it's Ethereum. There's others that are on their way to that. But it takes a long time for these systems to like really grow to the size that they need to in order to be like really profitable systems. And so there's been some kind of, debate over, is Eigen really so valuable right now, or does it need to kind of first prove that some AVSs have major traction? And I'm kind of like in between. I think it's okay for systems to not be massively profitable right at launch. Like I think a lot of people who invested in Facebook long before it was profitable, like could see, okay, this is going to grow into this hugely profitable thing in the future, and that's fine. A couple of other things just to note on Eigen. There's this interesting thing where there's this game going back and forth where a lot of airdrops in the past have been dumped, and like it kind of hurts projects sometimes. And so then projects are like, hey, we're going to do points, and then we're going to drop a non-transferable token, and then we'll turn on transferability later. And it's kind of to try to like prevent some of that from happening. But then people find these workarounds where people use both Pendle, which is a great DeFi project, and Whales Market to like during the points era before the airdrop even goes live. Some people are just like pre-selling their airdrop before it even comes. And there's all this interesting speculation. It's an interesting kind of workaround that I think is actually probably pretty good for the market. And what we have seen, so the Eigen transferability turned on this week, and the price of Eigen didn't really move that much. I think there's reason to believe that these kind of pre-markets for these tokens, Whales Market and Pendle, et cetera, do a pretty good job of pricing these tokens. The value of Eigen is quite high. I think the FDV is like 10 billion, but their total deposits is about 10 billion. And so I don't think it's this like insane valuation relative to its usage.
I think it's a little bit lower. Yeah, it's like 6 or 7, or they have some weird, it's like 1.67 billion total tokens and a price of 4 or 3.5 or something like that. So it's like 6 or 7 billion, something like that.
Oh, actually, yeah. So sorry, I was misremembering. Yeah, the FDV is just under 6 and the TVL is 10. And so if you compare that to some of the valuations you saw of like DeFi projects during DeFi Summer, where you had a project with not that many deposits and like decabillion valuations, we're not really seeing that. So Eigen doesn't seem like crazy overvalued or something like that. It's like fully diluted valuation is 60%, a little less than 60% of its deposits. It is the category leader in a new category that most people consider like a super important category. So I would call it like overall a success. I think the kind of ding on their public reputation when people were frustrated about the transferability, that's probably mostly gone. I don't get a sense that a lot of people are angry at Eigen.
I completely forgot about it. Yeah, I totally forgot about that whole thing. Yeah.
Yeah, and I think part of that, not all of it, but part of it is gamed, because I think what there's a group of people who are airdrop farmers that what they intentionally do is anytime there's an airdrop, they go complain, and then they want the team to go back and come back and say, yeah, you're right, we'll increase the airdrop. And it's just a way of like trying to eke out a little bit more airdrop, and it kind of works. And so, or it has historically kind of worked. I think some projects are going to do less of that these days. But so I think a lot of that is like somewhat manufactured frustration. Definitely not all of it was, but yeah, I think they're reputationally they're pretty solid. Absolutely a killer project. I think that's a really important category, and they're like by far the leader. There are like a handful of new restaking platforms that are going after that market, and I think there will be more than one winner, but they're way ahead for now.
I have some criticisms about the valuation of this protocol. So some of the issues that I have with the EigenLayer valuation is I think it's fine in some cases to double count TVL, but I don't know if I think that is necessarily transferable to a one-to-one valuation of the underlying protocol, right? Because we can essentially count the TVL of EigenLayer as TVL of other protocols. It's not necessarily EigenLayer TVL. It is Lido TVL or Ethereum staking TVL that is being reused in this protocol. So yeah, just like, have we seen any case yet where the TVL of the step 1 protocol is directly transferable in the value of a step 2 protocol? I don't think we've seen that yet, and I think this is what EigenLayer is creating, and I'm not necessarily sure that the valuation is going to translate into this kind of like one-to-one TVL to FDV ratio in terms of its value.
Yeah, a couple of thoughts on this. I think that's true of most protocols. Like if you look at the TVL of Aave, a huge percentage of it is coming from Lido. STETH is heavily used in Aave, so you could say, okay, that Lido reuse, and then the question to me is not, is it reused? It's like, the new place it's being used, is it going to generate revenue for that system over time that's sticky and accrues value back into the system? I think at the end of the day, like I'm going to evaluate all of these systems, even the L ones themselves, on like what kind of economic activity and revenue specifically they generate in that system. And so I don't really care as much if the ETH in Aave is STETH or ETH. I care if it's going to stick around there and generate borrowing revenues, et cetera, that persist. Same story with Eigen. And I think TVL in and of itself is generally not the best measure. But for a newer system like Eigen, it's kind of the only measure, because it's such a new system that these AVSs are just now kind of starting to come online. And so like we just don't know how many of those AVSs will be highly profitable and then we'll end up paying a lot of revenue into the Eigen system. It's just like unclear. And so there's just not a measure there to be had. So it's kind of like in the early days of Facebook, you can't really judge it based on revenue because they had essentially no revenue. And so you just have to kind of guess at how big is the network effect going to grow, and then how, like, are they going to be able to figure out a way to monetize that? So I feel like we're kind of in that stage now where TVL is kind of the only thing you can look at. And then I guess the two things you can look at is what's the TVL, and also how much traction do they have with AVSs? If you look at all the AVSs out there, how many of them are going to work primarily with EigenLayer versus other systems? How many new oncoming projects, whether infrastructure, DeFi, et cetera, will choose to do AVS stuff, will choose to pay restakers to secure themselves? And if that is like a very long list, and there's a number of people in that list that are, or projects in that list that are likely to generate a lot of revenue, then that's what, like, at this stage I would use to say EigenLayer I would expect to be highly valuable or not.
Yeah, so I guess some of my issue with this is that, like, the only thing we have to judge it by currently is this TVL metric. We don't have any sort of solid revenue to actually generate some kind of good idea by which this thing is going to actually be valued. Because I mean, at a, what is it, like just under 6 billion FDV, do we think that the AVSs that currently exist are going to generate enough revenue to justify a 6 billion FDV? I'm not so sure about that. And then, going beyond that, I think it's the typical sort of post ICO crypto craze where you have these like really high FDVs, really low floats, and then you need to 10x the number of tokens in circulation over however many years upcoming. Like that's going to severely dilute the value of each token. So, I mean, my current take is that this is going to just take the typical path of elevator up, escalator down on the token chart price.
One quick thought on the TVL side of things. Sorry if I'm dominating too much, but I had a call last week with an EigenLayer competitor, and talking about onboarding more restaking TVL, and they actually said, "Hey, we don't want more TVL right now. We have more TVL than we need to secure the AVSs that we have lined up," and so they're fully focused on, hey, when we find an AVS that needs the economic security, then we'll let more TVL on. And so, yeah, you might be right that like there's 10 billion in deposits, but of the AVSs, there's only 1 billion needed of economic security. And so there's 9 billion of kind of like, fake deposits, not fake as much as like redundant deposits, like not useful deposits. And so, yeah, I think that it's very possible if there's not a huge boom in AVSs that there's just more TVL in that system than is really needed. It won't be all that profitable to stay in the system, and a lot of that TVL could leave. On the other side, if the AVSs, if some of them coming on are like massively profitable and need a ton of economic security, that whole 10 billion is justified.
It does strike me that valuation currently in crypto is sort of based on excitement and how many tokens the project is able to convince people to lock up. And so it's interesting that we're talking about like relative valuation, but I don't know if that's really the stage that we're at yet. It feels like we are in this, there was a time in finance where like discounted cash flows were not a thing, right? Like people didn't know how to value companies like I think it's Benjamin Graham that sort of brought this concept, which is not actually that long ago. People used to just value companies based on, I don't know, like based on the way I guess we're valuing companies in crypto. Yeah, I would like to believe that we are doing it intelligently and there's some sort of basis for pricing. But I think my current explanation makes a lot of sense in terms of all the, I don't know how you put it, Jared, but you said, rocket up and then slow elevator down or whatever it is.
Yeah, elevator up, escalator down. It's the typical chart pattern in
There you go. Yeah.
everything in crypto. I mean, it's the same thing I said before about the way crypto moves, right? If you look at a Bitcoin chart, it'll skyrocket for like anywhere from 2 weeks to 2 months. And then you'll have like 2 years following that where it almost goes down to where it started. And then the next elevator takes it up to like maybe anywhere from 30 or 100% higher than where the last one ended.
Yeah, although Bitcoin dominance is just on a tear and the ETH BTC chart is hard to look at as an ETH holder right now. So it feels like Bitcoin is the only one that has these recovery elevator periods and the other altcoins, not so much, at least right now. But look, let's move on to the next topic real quick, Jared. And let me lean on you a little bit because you mentioned that there was an interesting tweet thread by Edward Snowden about Solana. I actually missed this one. Could you give us a little bit of a debrief on this? What happened?
Yeah, so there is a video on Twitter or X circulating around that is Edward Snowden on a big screen from Token 2049, where he is talking about Solana. And it's funny because he says, like, I don't want to name names, but Solana. And then he goes on to explain why, like, if you're in this ecosystem, there are things that they do to make it very easy for you to trade and launch tokens and do whatever. But in an ultra centralized system like Solana, I think his exact words were, it makes it very easy for people to start taking things from you. And he specifically references all of the scams and the fact that, MEV is a big problem, and that if you are in this ecosystem called Solana, there's a much higher likelihood that you're going to lose your bag than in other places because of all of these different things, right? There are so many scams. There are so many of these rug tokens. It's super centralized that, they could just start, if they start working with governments or whatever, they could start pulling levers that start, censoring people, or that start doing, you name it, whatever kind of
there's a lot there. I mean, the fact that you can lose a lot more of your money because there's a ton of meme coins on Solana just means that Solana did a better job than everyone else at attracting meme coin activity in the first place. I think a lot of chains would be happy to be the meme coin center of trading, even if it meant that there was a lot more, bullshit coins, basically, right? Interesting, but I didn't know about him making claims about it being more centralized than other chains.
Yeah, well, so that's the main point, is that it's essentially ultra centralized, right? Because I don't remember the way the system works now, but it's been a while since I did this research, but they offload a high percentage of their transaction processing to a centralized entity, and not necessarily to decentralized validators, for example. And I don't know what the percentage looks like, but I know it's a high amount, and that's part of the reason why they can boast such high transaction per second numbers. Also, part of those high transaction per second numbers are not even transactions at all, but that's another rabbit hole to go down. But no, one of the other things that he did kind of, I think what he was talking about was the fact that, from a standpoint of the builders of this platform, they technically endorse the use of MEV to the point where very, very large sandwich attacks can take place, and they have no problem with that. And so that's where people can start taking things from you, because you think you're going to go and execute a trade, and then suddenly you're losing bits of your money because somebody can come in and sandwich you and move the price, make a trade, execute your trade, and then undo that trade and take some of your profit. And then the final thing would just be if it is this centralized, what is stopping them from starting to, in an effort like they do, to be really big and have really great marketing efforts, or to just push it as far as possible, start collaborating with governments. And then the governments are going to say, well, we don't like you doing certain things, so they have ultimate control over whatever they want to do. They could start pulling levers to align with what a government wants, and there isn't really much that their user base would be able to do about that. At least this is my opinion. I'm kind of curious, Rhett, about what you think about this, because I think you probably have a good understanding of a lot of these systems.
Yeah, so a few thoughts. I think the MEV thing, I think, is not quite as strongly related to decentralization, personally. I think MEV is something that will always exist to some extent in these systems. I think there's some ways that they can upgrade the tech over time to reduce and democratize MEV. There's things that applications can do. There's proposer builder separation that's happening on Ethereum. You can do more of that sort of thing. There's these other concepts that people are in the Ethereum ecosystem have researched a lot, things like fair sequencing at the L2 level, et cetera. So there's things you can do there. And I think they can lead to more centralization, because if a small number of actors can greatly amplify their profits through, then they can accrue more of the stake and amplify centralization. But I don't think centralization personally is like a major cause of MEV. So that's my take on that. Now, I do think that this argument that Snowden's making about, hey, there's these risks of like government censoring your assets because there's a fewer number of actors they have to go after in order to shut down or censor the chain, et cetera. I think there's something to be said for that. And that probably, I think it was like April 2021, Vitalik put out a blog post called In Defense of Bitcoin Maximalism. And in that post, he talked about how the most important thing a blockchain does he like compared it to, in Lord of the Rings, the light of Galadriel, which is this light that they use that is given to the hobbits, and then they end up using it when they fight that giant spider. And it's supposed to be like the light that shines when no other light will shine. It's like, this is the thing that protects you when everything else fails. And maybe that is like the primary value prop of a blockchain, is it's the thing that doesn't fail, can't be censored when everything else fails. And if that's the case, then there should be this like ultra emphasis on decentralization and censorship resistance, et cetera, because, during the good times, an AWS instance will do. And during the bad times, you need to be able to be defensible against like a multi-nation state attack. And so I think that's part of what Snowden was getting at. And I think it's a reasonable point. And I think it is part of why both Bitcoin and Ethereum are super focused on the decentralization piece. And I think that's like a really important thing to focus on.
All good points there, guys.
It does feel like a Jared Edward Snowden friendship would be a natural, though. Does it not?
He is a skeptic. Yeah, I like it. Skeptics unite. Yeah. Okay, listen, guys, we could talk about this stuff forever, but let's move on real quick to the last topic for the day. Well, we've been kind of Avalanche light today, so maybe we can get a little bit of an update from JF about Buenos Aires and the summit and what's going on over there.
Yeah, so I think next week we probably want to talk about Avalanche 9000, but just to quickly touch on the summit, which is going to be in Argentina. I'm in Argentina right now. I'm in Buenos Aires right now. I think there's been some criticism about the location. Europe is definitely easier for a lot more people to get to because they're already in Europe. So it's been held in Barcelona in the past. And I think that was like an easy destination for all the builders who are on that continent, which I would think there are more. And for anyone in the US, it's also a further out destination than going to Europe. So I expect it probably will be a bit smaller than previous ones, but I would personally defend that decision. I think it's a great location. I've been in Argentina before. It has a very particular monetary system, as I think a lot of people know. But like, just to use a personal example, I at one point was walking around with $800, and in 24 hours, my $800 was worth $750 in the local currency. So that was the inflation hit.
$800 worth of local currency.
Of local currency, yes, exactly. And that was not a normal day, but that was there was a crisis with the central bank, and you could lose a significant amount of your money in one day. That is just one of the different things that were happening pre-Melee. Yeah, things have definitely improved since I think Melee took office. There's 3 different exchange rates here. There's not one, there's 3. There's the central bank one, which is not the real one that anyone uses. There's the credit card one, and then there's the real one that you can get in the street. Yeah, the difference between the 3 rates has gone more normal. So that's normalized. I think that's a really good sign. There used to be an almost 2x difference between the rate that the central bank would force on people. For example, like a tourist who would come and use their credit card before would have to get half the price. Like they'd get half the goods for the same amount of dollars that they were using versus using the local currency that you could buy in the street because of capital controls. So situation improving, but just to get back to doing the Avalanche Summit here, I think it's a really interesting region because there should be a lot of builders here. There is actual real crypto usage here because of the economic problems. Unlike, I think in the US, you don't really see people actually using it. People are holding it and they're maybe using DeFi, but they're not actually using it as a form of money. Whereas you see that here. So I think it's a good location. I think there should be a lot of these events in local jurisdictions where crypto actually makes sense as a monetary system. And I think that's where Ava Labs or the Avalanche Foundation is going as well. So yeah, cool destination, and looking forward to talking about this more maybe next week and the one after.
Got it. And the summit's in 2 weeks' time, right? I'm going. It's going to be the first
Correct.
time. Embarrassingly, it's going to be my first time in South America. I think all 4 of us are going to be there, right? Everyone's going to be there.
Correct.
So it'll be kind of fun.
Yes.
Hopefully, we'll get to do a podcast in person there together. That'll be really fun. Mm-hmm. And we should be able to get another pod in before the summit. So there should be a couple more before that. So it's good. So thank you guys so much. This was great having everyone on, and hopefully chat again next week. Talk to you guys later.
Bye, everyone.